Hello and welcome to our Thursday edition of CMS Forex News. I'm your market analyst Nick Nassad. Today is December 18, 2008. German business confidence continued to deteriorate in the December period, with the IFO Business Climate Index falling to 82.6, its lowest level since November of 1982. The effects of the financial crisis, which cut off easy access to credit, has roiled consumers and businesses in the Eurozone and in its largest economy. Next year could see the worst contraction in growth in Germany since 1993, as a fall in exports combines with weak domestic spending. The Eurozone trade deficit narrowed in October to a seasonally adjusted 1.3 billion euros. That figure beat expectations, but did so as imports fell 4.6% and exports were down 2.5%. European consumers are reluctant to buy goods abroad as their confidence is shaken and global demand is falling for European exports. That signals a sharp reduction in buying both at home and abroad, which points to weaker growth ahead and a deepening recession. In the UK, retail sales rose 0.3% in November, surprising forecasts on the upside. It's a rare good piece of data for the UK economy, though October sales were revised down to show a 0.3% decline. Sales were stronger for food and at discount stores. Still, the data should not be taken as a sign that the UK consumer is ready to start spending again, as confidence remains very low and the economic situation has deteriorated sharply the last several months. The euro-dollar pair continued its torrent climb, breaking through resistance at 0.93 to reach 0.9555 in New York trading. That's a 250 pip jump in the pair following an almost 300 pip rally yesterday. The dynamics we talked about yesterday continue. Expectations of another large UK rate cut are pressuring the pound, while a hawkish Trichet in ECB is bolstering the value of the euro. The pound-dollar pair plummeted today, wiping away the gains seen earlier in the week. The pair saw a slide of almost 700 pips from the session's high to the session low and breaks a recent level of support. In the US, initial jobless claims fell 21,000 to 554,000 for the week ending December 6th. That figure was close to the consensus and remains near a 26-year high, bringing up the 4-week moving average. The number of people staying on benefit rolls retreated from its almost 3-decade high. With the recession gaining steam, this is the time when companies are aggressively laying off workers. The Philadelphia Fed Manufacturing Index continued to show deteriorating conditions, though the index did improve to negative 32.9 for the month of December. Meanwhile, the index of leading U.S. indicators fell 0.4% in November, the 5th drop in 7 months. The index tries to predict the direction of the economy for the next 3 to 6 months and was led lower by a slump in building permits, plunging stock prices, and increasing job losses. The euro rose to 1.4720 overnight, but then fell from that high as the German IFO Business Index hit a record low. The pair retraced some of its gains for the week, finding support at 1.4180. The euro's fall was also led by the ECB's announcement that it will cut the rate of interest on deposits it holds in an attempt to discourage inflows and stem the euro surge. After falling most of the week, the dollar-yen rallied today after testing support near 87.20 at the start of the global session. The 270 pip move upward is most likely a correction to the recent fall and does not imply a reversal of recent sentiment. At the end of the New York session, U.S. stocks are down, with the Dow Jones about 200 points lower. In Canada, retail sales fell 0.9% in October, following a 1.1% increase in September. This data is quite dated, but gives the first signal of how Canadian consumers responded to the turmoil in financial markets that hit in October. A big reason for the drop was the fall in prices, as the volume of sales actually rose slightly. The leading index in Canada fell by 0.7% in November, its 3rd straight retreat and the largest since January of 2001. The decline in the index was dominated by a large drop in the stock market and in the housing index. A third release from Canada showed that foreign investors' demand for Canadian securities rebounded following 3 consecutive months of divestment. Foreign portfolio investment reached $2.8 Canadian billion. The US dollar-Canadian dollar pair rose today after hitting a 2-month low near 1.1818. The loonie was pressured as oil fell below $37 a barrel on concerns over global demand, despite OPEC deciding on a large production cut in their meeting. The pair climbed about 280 pips to test 1.2115. The Aussie and Kiwi also saw steep declines against the greenback and yen on the slide in commodity prices. Tonight, Japan will post its measure of all industry activity, and the Bank of Japan meets to decide on interest rates. Also tonight, the UK will release a measure of consumer confidence. Overnight, Germany posts its producer price index, and the UK will reveal its revised version of business investment spending. Tomorrow, there's only one release. Canada posts its consumer prices. And that concludes our broadcast. Thank you for joining us here at CMSFX.com. Come back tomorrow as we wrap up the week in the Forex markets. Till then, happy trading.